All right, let's start. So basically on the webinar content this evening, it's basically based on BBMA reentry. All right. So before before we even start, what we can do is I can just go a little bit of background in terms of what are the signals and what are the setups in BBMA, because I think some of the people are having problems in terms of identifying signals, the difference between signals and setup. Okay, so I think most of you have already learned basic BBMA. So what my aim here today is just to make sure that everyone is clear with entry points. So that's what we're going to talk about tonight. Okay. So all right. So in BBMA, there are 4 signals. All right. Let me just repeat that. Okay. In BBMA, there are 4 signals, and there are 2 types of setups. All right. And signals are basically extremes, candlestick direction, early, candlestick direction, confirmation, which is CSD. Hang on now, let me just check this. Is people still having issues with the sound? All right. So going back to what I was talking about earlier on, in BBMA, it's very straightforward that we are able to identify what are the different types of signals and what are the different types of setups. So for tonight, we are basically looking into setups. So setups in BBMA, there's 2. Okay, let me just write it down here. Okay. So in BBMA, there are 2 types of setup. One being MLV, which is also in Malay MHV, market as loss volume. And the second is the reentry. Okay. So these are the 2 setups in BBMA. All right. This is one thing that you guys should understand, that the setups are the point of entries. Okay. So I'm not gonna talk about MHB entries or MLV entries, but I'm gonna be more specifically talking about the re-entries. Okay. Based on my own understanding, there are 3 types of re-entries. What is okay, I'm just gonna write it down over here. Okay. Alright, so the first one is the re-entry after CSD. The second one is the re-entry after CSM, which is my favorite one. And the third one is the re-entry at mid BB. Okay. So these are the 3 types of re-entries that I'm familiar with. So that's what I'm trying to share with you all tonight. So I'm just gonna run through each particular setup, so you guys would pretty much understand how it works. Okay. So first of all, what we need to look for is the re-entry after CSD, okay, the candlestick direction. So as you can see on the chart right now that I have, I'm looking into CJ monthly, okay, CAD JPY monthly. Then we have a double extreme on this particular time frame over here at the top. So we have an extreme and we have candlestick direction over here. So let me just mark this. Okay. Alright, so we have an extreme there, and we also have the CST. Alright, so the CST is a very strong candle that breaks middle BB, so it gives you a sense of direction of where the market is trying to go. Okay, after the CSD, the market retraced up back to MA high, and this is now what we call the re-entry after CSD. Okay, so I hope this is straightforward for you guys. So usually this particular re-entry happens on sideways BB, especially when there's a potential market reversal. Okay, so this is what I usually look for into an entry. So basically these entries are usually against the trend at that point, so you have to be careful in terms of identifying signals and setups on the lower time frame itself. Okay, so let's move on. So basically after the market has gone down, you have your first CSM. Okay, so this is now the first CSM over here. Why do I call this a CSM? Is because of the Bollinger Band. So basically CSM is defined as the candlestick that breaks top or low BB of a momentum Bollinger Band. So this is a momentum Bollinger Band because you can see there's a market strength to it. The Bollinger Band is wide open. So this is what we call a CSM. And over here, this is one of my favorite re-entries because it's a much more safer re-entry because we already have a CSM. CSM, it indicates us the market strength going downwards in this case. Okay, so this is probably one of the most I think based on experience, the success rate on this kind of re-entries is probably about 75 to 80% and above on this kind of re-entries. So this is a really I really highly recommend this kind of re-entries. Okay, so so after that, when the market went down, and over here, this is what I call an MHV. So basically there's no more momentum down here, so the market reversed back to the middle BB. Alright, so what happens here, there's another re-entry is happening here again on the middle BB, but this is a much more what do you call this, it takes a little bit of experience to catch this kind of entries. Okay, let me just find other pairs to come up with this type of entries. Let me go for let's say another pair. Okay, so like over this one, so the best re-entry at middle BB is basically when you catch it on a zone zero loss zone. So what do I mean by zone zero loss? So this is what we call a ZZL. Is basically zone zero loss starts when the EMA 50 over here is pretty much down low over here. Okay, the EMA 50 goes below the middle BB. Alright, so once the EMA 50 is below the middle BB and all the MAs, all the moving averages are within the buy zone at between mid and top BB, that is what we call zone zero loss buy zone. Okay, for this kind of example. Okay, so basically the re-entry at middle BB is this example over here. Alright, so this is what we call the re-entry at middle BB. Okay, so this type of re-entry is much more efficient in terms of the movement that it brings about. Okay, so how do we my best suggestion to you all is basically what I always share to my friends is basically look for the reentry after CSM, because based on experience, that is the most efficient reentries that you guys will be able to go for. Reentries after CSM, if you come here, there's a good example over here. So basically, you have a buy CSM over here, and then you have a reentry at MA low. Okay, so usually the first CSM is what we want to catch, because that will bring about big pips for everybody, but it depends also as long as it follows the major trend. So how do you define major trend? Is basically the trend from monthly, weekly, and daily. And current trend is basically at H4, H1, and M15. So if you look at this pair at this particular time, the major trend is currently the EMA 50 is just crossing over the middle BB. So it's just about for the confirmation of a downtrend. Okay, so over here at monthly, what we can see is a full setup of BMA. First you have extreme, and then you have TP Wajib and middle BB. So let me just quickly do this for you guys. Right, so you have extreme over there, then you have the mandatory take profit down here, and then when the market went up to top BB, do you have an MHB? MLB, sorry, exactly the same. So this is the most of the people that the friends that I share my knowledge with is most of them have difficulties in identifying MLVs. So basically, MLVs is formed after the TP Wajib. So basically, what you need to do is after an extreme, there's a TP Wajib, and after TP Wajib, if the candles couldn't break top BB, that is just the first characteristic. Okay, the second characteristic, there should be a reverse candle. So this over here would have been the MHB. All right, over here, the pair. However, what you should do is you need to always go for the highest. So when the market tries to go back up, and that's the retest candle. Okay, so basically what I do is when on the reverse candle, whatever that goes back up on that particular zone, that's probably the sell area. And when you look at this on a monthly level, obviously the zone will be much more bigger. It says about 140 to 150 pips. Okay, but if you look at it on a lower time frame, then it should be much more lesser. Okay, so once you have MLB and then the market goes down, and finally you have a candle that breaks MA low 5 and MA low 10, MA 5 and MA low 10. So this is what we call a sell CST. Okay, so after sell CST, the market goes back up, and here would have been the re-entry after CSD. However, the market tests the MLV again. All right, so it's very important that when you have an MLV on a particular time frame, the highest body marking, you shouldn't be deleting it at any time, because it will be tested again in the future. So when that happens, then you know what you're looking for. All right, so after that, the market went down, and you have the first CSM. Okay, so over here we have a CSM. So what's happening here when you have the market reversing? The market is trying to test the MA high again. So this is what I call the re-entry after CSM. So for us to entry the re-entry after CSM, we need to be careful, because the lower time frame, if you can see this one, this is a monthly candle, and it has traveled so high up, then obviously the most of the lower time frame would have been going upwards. Okay, So basically, it's on the current trend is probably going up at the moment. If you can look at H1, H4, all of it, most of it is going upwards. All right. So how do we tackle this re-entry? Is basically based on two things. That's the next bit that we need to talk about later on. Is based on um, entry on zones and entry that you do for confirmation. So now on the next bit, we will be talking about the difference between zone entries and confirmation entries. So what do I mean by zone entries? Okay, so can you just give me 2 minutes here? I just need to answer a phone call, all right? So give me just 2 minutes. All right, back to what we were talking about earlier. So let's go back to the difference between zone entries and confirmation entries. All right, so what did I mean by zone entries? So basically, when you're a BBMA trader, obviously the zone that we're talking about over here is the re-entry zone, which is from MA5 to MA10. All right, MAHI 5 to MAHI 10. So in this particular example, we're basing this re-entry based on the fact that there's a full setup of BBMA here on this particular pair, which is AUD CAD monthly. All right. So in order to enter this market for sell, basically, if you're doing this as a zone entry, what you should do is obviously most of the people that I know that basing their entries on zone entries is basically they just put pending orders on the zone. So basically what we can do here is you need to do a little bit of calculation in terms of money management. So from from MA high 5 to MA high 10, it has about 140 pips in between, all right? And what we should do if we are going to sell over here, we need to be able to know what is our cut loss condition. All right. So based on zones, so the zone is on MA high 5 to 10 and also middle BB. This is based on BBMA. So if the market goes up while you're selling and it breaks middle BB of the monthly time frame, then obviously you know that at some point it has to retrace and it's gonna go for top BB. So that's really important. So if you sell within this zone, and if you're floating negatively for a while and the market didn't manage to break this middle BB, then that should be fine. That you just hold your position until the market goes down. However, based on this zone, you need to set your cut loss. So cut loss should be based on the MA high 5 and 10 or middle BB. So when the market is going up, this is your zone entries, and your cut loss should be at middle BB. All right. So based on confirmation entries, now we'll talk about a little bit of confirmation entries. So this is what most people do. they base it on confirmation entries. So confirmation entries is obviously multi-time frame analysis. So what I usually do is when the price is at the zone of the reentry, which is MA high 5 to MA high 10, then I should be looking for an extreme at weekly time frame. All right. So over here, as what I can see, there's no in correction. In weekly, there is no indication of an extreme because the market is just reaching middle BB. All right. So what can we do about this is basically we need to learn a little bit of support and resistance. So we need to combine a little bit of our knowledge based on support and resistance. So over here, a good friend of mine, Radin, what he taught me how to use SNR is basically the most easiest way to do it is just to change your candles to line charts. All right. So if you do this on line chart, then basically you need to find the previous supports. Okay. So over here, so this is the nearest support, and obviously you can get the next one up. Okay. So let me just change the color for this one so we can pretty much identify. Alright, so now I know that these are the potential zone of resistance for this time frame on a weekly. So I know that right now, if I want to sell at reentry monthly, I shouldn't be selling it right now because it is not testing any resistance yet. Okay, so if we look at weekly, we know that this is a zone of support earlier on, and this is what we call the breakout. Okay, so when this is a support before and the market breaks through, then this is what we call a breakout. And after a while, the market goes down. When it goes back up to test it, and this will be known as a new resistance, because now we have a support that becomes a resistance. So these are some of the guides that you can use to narrow down the point of entry. It doesn't have to be really specific, but if you really want to learn more on SNR, then you should seek learning from Radin FX. However, this is the easiest way that he taught me how to identify the SNR points. So basically, based on this information that I know, the market is trying to go on this particular areas. All right. So these are the points that I should be looking for in terms of the reversal. So my entries should be based on these areas. Okay. Let me just mark those just for reference. Okay. So this is what I call market mapping. So regardless we do this entry or not, but it's really nice to see when you do your analysis and you do your market mapping, when in the future that you know that your analysis is correct, then it's going to build some of your confidence. Okay, so let's go back to monthly. Or it looks really ugly now, but yeah. Okay, so we know those are the lines, or those are the resistance areas that the market's going to try to go. So basically the highest point at which the market's going is obviously near middle BB and also the MA high 10. So right now I wouldn't be looking for sell at this point because I know that it's going to test the resistance. Okay, so based on weekly, it looks like it's going for EMA 50, because what I drew the line here earlier on, that's what we call static SNR. All right, so this is what we call static SNR. This is based on the horizontal line that we put in, but BBMA is much more of a dynamic SNR. This is what we call the lines in BBMA. That's what is acting like a dynamic SNR. Okay, so if you have a static SNR and a dynamic SNR going to the same area, then that's a really good indication of where the market's heading. Okay. All right. So we look at daily. over here, when we look at daily, we could see that there's a market strength going up. So if we go for sell now, it would have been a really bad shape, because now we have a candlestick momentum and it's pretty much waiting for our re-entry buy at some point. So it's really, really bad for for anybody to go against the trend at this point, because now, as we know, that daily and below, it should be going uptrend. So that is, in order for you to sell on monthly, you need to have at least an extreme on weekly, and obviously, to be a lot safer, I would prefer a MLV or a double extreme at the daily, because the time frame of the re-entry, this is what we call the first time frame, and weekly should be the second time frame, and daily should be the third time frame. So in order for you to have a much more valid reason for you to enter sell on this particular monthly re-entry, you should have at least a sell setup available at the third time frame to help you build your confidence in that point, in that sense. Okay. So hang on, I think some people are still having issues with sounds, but I'm just gonna carry on because this session is being recorded, so I hope that I can share it later on. All right. So I hope that it's pretty much clear when it comes to zone entries and confirmation entries. Okay, so let's go through another example. Okay, let me just find another example of zone entries. Okay, let me just find another point of zone entries and confirmation entries. Okay, let me just see here. Okay. Let's look at AUD JPY. All right. Okay. So at the first look at this time frame H1, we know that this is zone 0 loss buy, because the EMA 50 is below middle BB and all the MAs are within above the middle BB. So this is a zone 0 loss buy. So if you have a time frame like this, then obviously it's a lot easier for you to just follow the trend. So over here, what we have here is CSM. Okay, so you have a CSM over here, a buy CSM. All right, so you have a buy CSM over here, and you have a re-entry over here. Okay. All right. Okay, so based on this re-entry, you can pretty much base it on two things. Okay, so if you base it on BBMA, then obviously you're aiming for MA low, because you have a buy CSM and obviously the re-entry buy at MA low. Okay, so let me just mark this. So this is now our zone for entry, MA low. All right. So now when the price hits MA low, what we need to look for at M15, there should be an extreme. Okay, so over here we know that there's an extreme at low BB. So the BB is sideways, and obviously it rejects the sideways BB. It's gonna go back up. All right, and then M5 should have been a double extreme or an MHB. So as you can see here, you have a double extreme. So it's a lot more easier for you to follow through in terms of following through the trend. Okay, so based on this entry, you have a buy CSM and then you have a re-entry, and basically your re-entry is being entered at the low BB, so it's a much more safer entry. Okay, so if you enter buy, for example, if you enter buy here at low BB, then your cut loss should be based on confirmation as well. Because your entry is based on confirmation, so your cut loss should be based on confirmation. So how do we know that we need to cut loss in this condition? So basically there are two ways that I go about this. First is if I do my re-entry on H1, then obviously my cut loss condition should be at H1. So my cut loss condition should be if the candle breaks middle BB, that's when I'm going to cut loss, because after that I know that it's going to go back to low BB. Or you can pretty much do it on the second time frame when there's a sell CSM at M15. Then that should be a good point for you to cut loss first. All right. But however, I usually go about in H1. All right, the point at the time frame of re-entry, and at M15, there's also you can also check your confirmation over here. So so that's how you do confirmation entry. So I'm just gonna go through how do we do zone entries on this one. All right. So basically, when you do have, I'm just going to go with naked charts here. So basically, this is the highest candle before this happened. Okay, so this is a market strength in BBMA. It could have been CSM, and then you have a reverse candle. All right. So after the reverse candle, then it produces a resistant area over here. Okay. Right, so as you can see, that's a resistant area. So when this resistance, there's a candle that breaks through, then obviously this will be the zone of buy entry after that to follow through the trend. Okay, so if you miss these 2 points over here to buy, then obviously at some point the market tries to retest again that zone, then that would have been a zone entry. So how do we cut loss from this zone entry? The zone entry is about 5 pips, all right? And usually most people, they're just going to go for maybe about 10 or 20 pips after that. So they just set their cut loss point, okay? So that's basically on how the difference between zone entries and confirmation entries. So zone entries is pretty much just laying down pending orders. And confirmation entries is based on the market condition, based on what's the market trying to do. Okay, so I hope that I made that clear for everybody. So let me just check on the re-entry part. Okay, so is there any questions so far in terms of the difference between zone entries and confirmation entries? I have a request here. Walaikum salam, Fear. He's asking that if I could ask to show more example of on marking of zone entries. Okay. Basically, what I can do for you is I can show you a little bit of how you do zone entries, and the most simplest way to do zone entries is based on two things. There's a candlestick formation, basically. So based on candlestick formation, what I usually use is there's only two. One is the engulfing break, and the second one is the dominant break. So what is the difference between an engulfing break and a dominant break? I could run through a little bit now, but there's a video that a colleague of mine did, the Kidding Butcher. He did a video on two setups, which is the dominant break and engulfing break. You can look at it at my channel on YouTube. However, I can go through an example on that here. Okay, So basically, when you're looking into the market, let me just go through. Let me find a good example for you guys. All right. Okay. All right. Okay. I think I better find a good pair to go for. Let me see. So, oh, not this one. Okay, let's just go for gold then. Okay, so in order to find the setups in terms of dominant and engulfing breaks, basically a dominant break is based on both engulfing and dominant breaks. You're looking for the lowest and the highest point of the market. All right. So if we look at let's just go with, let's say, with this weekly. All right. So over here, we're just gonna take these two examples over here. Right. Let me find a good engulfing and dominant break. Okay, let me just see if this is okay. Sorry, I just need to find a good example so it's much more clearer for you guys to understand. Okay, doesn't look good. Alright. So here's a good example of a dominant break. Alright. So a dominant break is the highest candle in a particular market. So that if you're looking at time frame H4 over here, you need to look for the highest candle. Okay, obviously over here. So this candle is the highest candle at which the market has gone through, and after that there's a reverse candle. Okay, so this is now the highest point right now. Okay, so dominant breaks is usually the candle at the highest or the lowest point, and there should be three candles or more that breaks it. So what do we know? What do we mean by candle breaks? So this is now the dominant candle body. So within that body, there has to be at least three or more candles that breaks it. So there's one, there's two, three, four, five, and finally the sixth candle that managed to break this dominant candle. So this is now what we call a dominant candle break setup. Okay, so when you have a dominant candle break setup, then obviously this is now the zone at which the market will try to retest again in the future to sell. Okay, so that's a dominant break setup. Okay, so in this condition, then usually you can pull the Fibonacci from the candle that actually breaks it from the body to the highest wick. Right, so that's how you pull the Fibonacci. Okay, so basically when the market goes down and it goes back to the pullback, that's a sell entry over there. It managed to break through TP1, then obviously it's going to go for TP2. All right, so that's dominant break setup. Let's look for engulfing break setup. Okay, I think there's also a dominant break setup over here in AJH1. All right, so over here we have a candle, the highest candle, and there's three or more candle that managed to break the setup. Okay, so break this body. So this is now a candle break, dominant candle break setup for sell. Okay, because now the candle has broken through and it managed to breaks through the dominant candle. So basically, when the market goes back into this zone, as long as there's no candle that managed to break through the highest body, then it should be still for sell. Okay, so right now it's for sell, and obviously you can pull the Fibonacci from the lowest body of the body that breaks it and to the highest wick. Okay, so that's how you pull the Fibonacci. So based on this, this is the Fibonacci that you pull from a dominant candle break. Okay, let's look for engulfing break then. CJ, all right. All right. Sorry. Okay, so over here we have engulfing break as sorry, dominant break as well. There's 3 or more candles that breaks it. Let's go here at daily. All right, so daily is quite nice. This is a really good example because over here we have dominant sell setup, dominant break setup. 1, 2, 3, 4, 5 candles that breaks this. And over here at the bottom we have an engulfing break. So an engulfing break is a candle that breaks through 1 or 2 candles. Okay, so it's 1 versus 1 or 1 versus 2. So over here it's 1 versus 1 or 1 versus 2. Okay, so over here we can pretty much call it this is an engulfing break. So for an engulfing break, what you need to look for is to find the initial break. Okay, so basically this candle managed to break this candle through the highest wick, which is this. So this candle managed to break this candle from the highest wick. Okay, so basically this initial break is the point of entry in terms of the initial break retest. Okay, over here. So this would have been the buy entry for this particular engulfing break. Alright, so how do you pull the Fibonacci? First, you need to find the nearest SNR. So this is the SNR point, the resistance, as you can see over there. So basically, you need to find the candle that breaks that resistance. So it's basically this third candle over here. So you need to pull the Fibonacci from there to the lowest wick. So this is now the how you pull the buy Fibo in terms of the Fibonacci. So basically that Fibonacci ends up at T3 at the dominant break setup for sell and daily. So that's pretty much how you do it. So how do you make those zones? Then basically if you're in dominant break setup, then this is your zone. So any candles that goes to this zone, then that's your sell area. And obviously these zones are pretty big. That's for daily would have been 110 pips. And obviously your stop loss would have been on the highest wick, which is about 150 pips. Alright. And obviously let me just calculate for you guys. So basically when you pull the Fibonacci, you need to do your risk and reward ratio. So basically what I usually do for engulfing breaks is basically dominant breaks. We take a little bit of middle half of the dominant candle. That's where I would probably put my sell PO, and then obviously from there I would calculate how much is my SL. Would have been 90 pips, but my reward would have been to TP1 would have been 190 pips. So that's roughly about 1:2. So that would have been a better bargain in terms of losing 90 pips and earning 190 pips. Alright. Okay, so that's pretty much how you define between zone entries and confirmation entries. Okay, so if you look at here in BBMA wise, Euro USD, you had the dominant break over there, so exactly what happens here, then you know that this is a direction for sell. And obviously after the market went down, you have a CSM and it went back up to middle BB, it created a re-entry at middle BB. So the market went down again, it created a CSM, and then it has another re-entry again over here. So that is pretty much how you do your entries. And based on this entry, as you can see, you have a bullish engulfing over here. Then obviously the initial break would have been the entry for buy. Okay, so this would have been the entry for buy in terms of this particular time frame. However, if you know that this is a bullish engulfing setup and you wanted to buy over here, then obviously if you're going for confirmation, then you need to look for H4. There should have been an extreme, and in this case you had a re-entry at middle BB. All right, and then H1 we'll have an extreme as well over here. So it's pretty much much easier for you to enter the market. For me, when I'm going against a trend, I would always wait for at least a candlestick direction, and after the candlestick direction, I will just go for the re-entry after that. That would have been a much more safer entry. Okay. So when it comes to money management, that's the third thing that we need to talk about right now for tonight. So basically, when you do zone entries, okay, this is really important. All right. For example, you have 100 USD. So basically, on 100 USD, if your entry, let's say you took 0.01, okay, that's your entry, and obviously you just put a PO 50% at that dominant candle. All right, and let's say you sell and you know that your cut loss point would have been at, say, the highest peak, let's say about 20 pips, and your reward would have been 60 pips based on BBMA. All right, but if based on zone entries, then you base it on your Fibonacci. So based on Fibonacci, your cut loss would have been 20 pips, but your rewards to TP1 would have been about 30 pips. TP2 would have been 60 pips. So you need to reason out. So basically, when you enter 0.01 lot on a $100 account, even if your entry is floating negatively, it would have managed to survive for over 1,000 pips before you burn your account. Okay, so the most important thing when it comes to zone entries, that you actually manage your entries. Okay, when it comes to confirmation entries, that's a little bit more different, because usually you will see BBMA traders with a lot of layers. Okay, they usually layer a lot because of the multi-time frame analysis that they do. Because let's say, for example, that my re-entry at H1, okay, usually you will see a lot of layers over here when it comes to BBMA trader. Why do they do that? Because at M15 there's an extreme, and M5 you had an MHB. All right, so when they see these kind of things, then they would layer it, and then we find another re-entry, we can layer it again. Okay, so why do they layer that? Because when you do multi-time frame analysis, now the area at which you would be floating is just very slow, very small. There's only about 20 pips for the market to move. Up and down is just about 20 pips up and 10 down. So the market movement is limited to the Bollinger Band of the lower time frame. So basically, when we do multi-time frame analysis, then our entries will be much more on a precise area, and people will be layering much more easier rather than the zone entries. Because zone entries, you need to wait. That's where the patience comes, because it takes a while for this kind of entries. Okay, so I hope that I managed to enlighten you guys in terms of the difference between zone entries and confirmation entries. What I usually do is all the things that I've learned, I practice it on my own entries. But obviously, most of my entries is based on BBMA, and I highly suggest that you look for the re-entry after CSM. And whenever you have a zone zero loss condition, that will be the best time to look for that re-entry after CSM. So I hope this session tonight have I mean could help you guys in the future. But hopefully we can do another webinar before the end of the month, I hope. All right. So that's it, guys. Thank you so much. Assalamualaikum warahmatullahi wabarakatuh. For those who still want to stay, I can have a quick 15 minutes after this for question and answer.